Good morning. It's the week before Easter, and once again, we're opening with discord on all fronts. U.S. markets closed nicely up between 1.24% and 166 for the S&P as Wall Street begins to contemplate Biden's new infrastructure buying spree. We know that the number is $3 trillion, but the question is, at what point does the cheap money balloon collapse upon itself? Accept some details from the president's mouth Wednesday. This morning, we're already looking at falling index futures despite the $1.9 trillion stimulus checks in the mail. Friday's data was far from stellar. Personal income contracted by 70% in February and spending by 1%, mostly ascribed to harsh weather. We will say that Michigan News Consumer Expectations Index for March is a happy one. And Reuters reports Morgan Stanley upgrading Q1's GDP predictions by nearly 1.5%. So again, is that equities rise something to bank on? Because in the past, stimuli have been only good for a couple of days' worth of gains. Clearly, that year-long channel has been broken to the downside as the month began, and we've been in a descending triangle ever since. On the hourly candles, we can see a pattern of crossovers into the upper Bollinger Bands, but none so far have had any staying power. Basically, we're trending sideways. You can see our RSI is already southbound after that last break. So at the end of the day, maybe it will be up to the fundamentals. Ahead this afternoon, 3- and 6-month bill auctions, which for the past 2 weeks have actually been falling a tad. So at least we do have some signs of optimism. European markets were all cheerily green throughout the continent on Friday, as sentiment markers in Germany were also positive for March. Mining, oil, and gas companies saw backwind as more U.S. spending cheered up some otherwise gloomy lockdown-bound markets. This morning, Britain's Small Businesses Federation revealed that over 20% of UK companies have halted exports to the EU due to inordinate paperwork. At the moment, we have a rising yen, a dropping euro, and a chance to look at the pair along this upcoming week's pivot points. Notice last week we basically ran along support 1, which this week is a little closer up and easier to breach. We're looking at a pretty steep RSI dropping, so there's a chance we might break S1 this week and aim at S2 for some action. This morning we'll be getting some mortgage and credit data from the UK, plus short-term bond auctions in France, and with nothing from Japan till midnight to upset the balance. Then, at a half hour before midnight, Japanese unemployment and retail, so look out for that pair then. Except in Australia and New Zealand, Asian stocks this morning are up, led by the Nikkei with 1.20%. This morning's released Bank of Japan's meeting minutes shows some cautious optimism, saying there was no planned change to monetary policy. And amidst news it's generating half of the world's coal power, China early Saturday delivered a stunning 179% industrial growth profit year to date. In 2020, the country reportedly built triple the amount of new coal power plants than the rest of the world, contributing to the environmental mayhem considerably. Maybe their new $400 billion deal with Iran will alleviate some dependence on Australian coal. Meanwhile, the yuan has been hit with a loss that's driven it back to December levels. It's now up to the Chinese government to decide if it wants to fix that or leave the currency free and let it slide alongside the dollar. Oil continued down overnight after the Baker Hughes count delivered another 6-rig increase, and although they're not yet definitely defined as a commodity, Bloomberg this morning reports on a shortage in computer chips that's pushing up prices on everything from cell phones to cars. On the corporate front, all eyes seem to be on Viacom CBS, whose shares had gained 1,000% over a one-year period since March 2020. They've since been spiraling down, losing 40% in the past few days alone, and all that after announcing a share offering as the company launches its new Paramount Plus streaming service. It would seem that in a landscape now smeared with specialty providers like Netflix and Disney, pushing good old legacy media over just one more delivery channel is not nearly enough. Unfortunately, the contagion is spreading throughout the industry, pulling Discovery Channel down with it. WeWork is raising its IPO flag. This time they'll be trying it through a SPAC merger with BowX. SoftBank will allegedly maintain a 1-year lockup on their shares in the company, according to Reuters. And finally, Tencent Music has announced a $1 billion buyback as the SEC gets ready to delist Chinese companies from U.S. stock markets. So, food for thought for the day. We'll leave you with a reminder not to invest more than you can afford to lose and wishes of a fascinating week ahead. Bye.